The Central Bank of Nigeria has taken a major regulatory step by upgrading the licenses of leading fintech firms and microfinance banks to national status, as we understand, recognizing that these platforms now operate far beyond their previously limited regional footprints. Now, the move comes as digital financial services continue to surge across Nigeria, as we've seen, supported by mobile technology and widespread agent networks, and as regulators seek to better align licenses with actionable operational reach. Now, with national licenses, which actually come stricter, capital requirements, enhanced compliance obligations, and expectations for a fiscal presence to handle customer issues come into question. Of course, there are still questions as regards the shaping of these firms, so to speak, the possibility of competition between them and traditional banks. Consumer protection is also in focus, and what the future of digital finance in Nigeria would eventually be. Now, we will be talking to Stanley Onora, who's an economic analyst, and he will be sharing his expert view with us on the show. Stanley, thank you so much for joining us on Business Edge.
Good morning. It's nice to be here with you.
Of course. So, from a practical and operational standpoint, let's understand, what does the CBN's license upgrade change now for fintech companies and microfinance banks?
For some of the fintechs, for the new banks, which is what they are, they are a hybrid. Most of them don't even want physical presence. Their online presence has been well enough to service their customers, attend to needs, and operate effectively. But what this has done is that, unlike what the fintechs, the licenses that they had, there was that little loophole where they could use a unit microfinance bank license and operate probably regionally or within the state. The license only told you to not have offices in different locations as prescribed by the license. But the loophole was there was nothing like online as at the time that most of those policies were enacted. But that was the loophole. You could have an online presence across the country, but you are limited to having offices in specific locations. But now, operating, what the CBN has come to realize is that some of these new banks, as I call them, have the capacity to service the whole nation. And you go everywhere around the country, and they are present, and they are operating with licenses that are even below the capital requirement for such activities. And in addition to that, there are widespread activities across the country. They needed to be upgraded to match the status of which they operated. So they wanted compliance at all levels to match what they were doing, using risk factors and all of the parameters. And it's kudos to them for doing that.
Okay, so agreed. We see that the Central Bank of Nigeria, according to its statement, says that the upgrades reflect expanded national footprints enabled by mobile technology. But then let's look at the capacity of these firms, the fintechs and the MFBs. What would you consider as the concrete usage, the transaction amount, the customer data support that actually grants them this national license status?
So, if it's on the side of the fintechs, you can go to the central bank today and say, I want to start a national microfinance bank.
Stanley, I think we just lost audio from your end. I don't know what the issue might be, but we can't hear you anymore. So maybe that's what we need to quickly resolve now, even as we continue to look at this new policy statement and upgrade coming from the Central Bank of Nigeria, giving the fintechs and microfinance banks the license or the opportunity to operate nationwide and have different retail outlets and branches in different parts of the country. Stanley, can you hear me?
I can hear you clearly.
Okay, so we lost audio from your end for a while. So I'd like you to just conclude with, or continue with your response as regards the capacity of these firms.
Okay, so what I was saying was, as an individual, if you want to open a national microfinance bank today, you can go to the CBN and request for that license. And if it's granted to you, you can operate nationally. It doesn't matter if you have that number yet. You can, maybe you have that projection for yourself. But on the flip side, these fintechs had grown. Most of them did not even expect the numbers that they grew, the leaps and bounds that they've grown over the years. But enabled by technology, enabled by circumstances like the the cash crunch that we had as at the time of redesign, and the adoption of technology, making things easier for people, and their innovation, they have grown to most of them have millions of customers that rely on them nationally. So it's now on the side of the central bank to enforce that compliance, to look at these people that they are no longer small boys, as we put it in quotes. They're no longer small boys. They have attained that by the number of customers that they service daily, the transaction counts that they process, and their systemic importance at the moment. So yes, I will say that they have achieved that by sheer innovation, by the numbers that they've required, and their national presence.
Okay, so with this upgrade, doesn't it mean that these fintechs and the MFBs would have to meet stricter regulatory requirements, including significantly higher minimum capital thresholds?
Absolutely, yes. So for national microfinance banks, you have 5 billion naira that you must meet as minimum capital requirement. That also comes with a lot of other compliance, extra compliance that you need to do. Nigeria being a country that was on the grey list, that we're trying to get off the grey list of the FATF, you want to align your presence to make sure that if I'm operating nationally, it means that the risk that I carry for operating as a national bank is way higher than the risk that I carry is way higher than operating as a unit or as a regional bank. Now, the compliance that is required for a regional bank is different from the compliance that is required for a national bank. There are other checks and balances that must be done for a national bank. Now, with the increase, with the mandates that they are now upgraded to a national license, it comes with extra compliance for them. It comes with greater regulatory requirements in different folds. And, like we already mentioned, the capital requirement, which doesn't come cheap for them, but I expect that they should have met that. But much more than that, on the side of the fintechs, they now have the liberty to say, okay, we could even open like physical branches across the nation if we want to, to give the people a feel of having like a physical presence where you could walk into the branch. I know that we're not just a new bank. You can approach us from that side. So on that side of the fintech, but for them, it's a lot more compliance issue that they need to now be able to tackle with regards to the national license.
Yeah, so that brings me to this next question. We understand, yes, national MFBs and some fintechs are required to even maintain a minimum capital base of about 5 billion naira from what they usually used to pay. That's about 2 billion naira. Of course, that used to be the threshold. But then, how might this affect fintechs and these banks' ability to attract investment? How will they be able to manage risks? How will they be able to also remain competitive with these new requirements?
For them, it's at the initial cost. In the near term, what you look at is that it might require so much more from them in trying to meet that threshold. But as a company, means that you now have a wider reach, a licensed wider reach that you can use to meet your investors to say, okay, we are now a fully licensed national microfinance bank that has the reach across the country. We can open up offices, we can have collaborations, we can then do things. So they can get a lot more investors. And Nigeria being what it is, you can use that to even sway some of your customers to say, you can go to any of our branches across the nation at different locations for you to get some of your complaints resolved. And it gives a bit more confidence to them. But on the side of the cost, it's going to have a lot more cost on the fintechs. But that cost comes also with the level that they have grown to. With the level that they are for a lot of this microfinance, I'll use one of the fintechs that if you go, they use the average business owner has either their POS terminal or if you try to buy things from somebody on the street, if someone gives you a number of account numbers from them. So you see that they that have that national risk and that national spread. And it also comes with the risk of compliance that if anything were to happen to any of this fintechs, it will have a national systemic risk on the sector. So in trying to block this loophole, the CBN is also trying to ensure that those fintechs can assure their customers, and it gives them the ability to move to investors and get more funds from them. So I feel like it's a lose and win at the same time. But overall, in the long term, it's a positive.
Okay, so in fact, as you said that the costs will be determined by these fintech banks in terms of their size or their ability to come good with the required, most especially the financial undermark for this. Now, we're still going to look at how it affects startups. I'm talking about smaller groups, smaller clusters of startups, that are hoping to equally merge or fit into this narrative. But Stanley, I'd like you to just stay with us for a while, right? When we go on a break and we return, we are going to continue the conversation from that line. Do stay with us. So on the show, we have been looking at the Central Bank of Nigeria granting upgraded licenses to fintechs and microfinance banks to national status, which means that they can operate across the country and have branches and, of course, be able to connect more with more customers. But then there are wins and losses in this, just as our guest has actually explained. And I'm talking about Stanley Onora, who is an economic analyst, and he continues to shed more light on this so that we can have a grasp and an understanding of what this new regulatory stance coming from the Apex Bank is. Stanley, thank you so much for staying with us. So we come to the part of how it affects new entrants, let me put it that way. Now, could stricter capital and compliance requirements raise barriers for entry, or should we say smaller startups, or do you think it will reduce the flexibility and their agility rather of these emerging fintech players?
From what I can see, from what I can tell, I feel like the loophole that existed in terms of being the specification on the law was officers, but what the CBN has come to say, what the CBN has indirectly come to say is that if you then have a national spread, whether you're operating as you need to upgrade. If you're operating below the threshold while you have like a national spread, or you're operating on a regional level, you have a license for the regional level, and then now you have a national spread, you need to upgrade. Inadvertently, that is what they've told us. But for the smaller fintechs, it now comes up to them to know that at any point where I know that I'm going to go national, I should make adequate preparation for that. That comes with its own limitation in the sense that it can increase the barrier, the barrier to entry. And for anyone that is starting off, I would say to the small startups, start off from where you are, run as quick as you can, and then be looking at the side that that at this point I will need to upgrade to a national level if I'm going to service Nigerians across the country. From going by what has already happened, using that as an antecedent. I don't know if they're going to write the circulars to come out to ensure that the online presence is now mandated. If they do that, then we now know that it's now something that is gazetted. But aside that, if you're a small fintech preparing to go national, know that you will still fall within this category in the near future if you get there.
Okay, so we understand that Nigeria's fintech sector is valued around $10 billion. That's quite interesting. And you mentioned preparation for startups, and those are the entry level. So how do you view the role of venture capital and private funding now in supporting growth, of course, while they try to scale and align with the regulations?
They've been pivotal to the fintech space. You can't take out the venture capitalists that have brought in their funds, their expertise to ensure that some of the fintechs that we have today exist. And kudos to them. Some of them have exited beautifully with huge returns on their investment. I think they still play a very critical role, and they are still funding the fintechs. And as regulators on the side are trying to ensure that compliance is a key issue that is addressed, they too, as venture capitalists, understand the importance of this, especially when it comes to things like a regulated environment like banking. you would know that as tightly regulated as it is, it has its importance because you're dealing with people's money, you're dealing with people's everyday livelihood. So, and then anything could just go wrong. So day two, as this expands and maybe these fintechs go back to them to require more capital in terms of establishing across the country or putting one or two things together, I'm sure they would oblige them because they have seen the growth that has happened over the years and the potential for higher growth with our population increase, with the diversity, with the diversification of the economy, and deepening of financial services within the economy. So there's still a lot of room to grow, and I'm sure that a lot of them are still very active in the space and willing to support.
Well, yeah. The Central Bank of Nigeria has actually come out to say that it's not whole yet. I mean, it's not going to be automatic in terms of getting the license. There are a lot of requirements, a lot of steps that these microfinance banks would need to take in order to meet that threshold and, of course, be part of this new ecosystem, of course, as it also affects the new entrants too. So let's see how all these will all go well for the players in this industry and how that would actually connect these firms with, the budding customer base that Nigeria has. Thank you so much, Stanley Onora, economic analyst, for sharing your thoughts with us on the show.
Thanks for having me. I appreciate it.
You're welcome. And so we will be shifting our focus to Nigeria's new tax laws. Now, we understand that in Lagos State, the Revenue Service has come out to say that they can, based on certain parameters and the provision of the law, also be able to recover taxes from defaulters, maybe without having to go to court. But then we are going to look at the nitty-gritty of this, of course, look at all the gray areas and try to let people understand where the lines need to be drawn so that people don't run foul of these new set of rules, and of course, as it is applicable by the Lagos State's internal revenue. Of course, we'll go on a break right now, and when we return, we'll quickly look at it.